Hey guys, so the moving average. On the older ASTROFX videos, we did go over the two moving averages, the 80 EMA and the 14 EMA. They have updated 2 or 3 times throughout the lifespan of ASTROFX, stretching up to 5 years now. Now I'm here just to simplify things a little further for you and show you certain concepts which can allow you to refine what you look at on the chart, refine your trading, and more or less hit the simplify button, but with power. Okay, so got USD CAD up here. I'm going to browse over a few charts, starting on the left side, our color chart. So what we have is various levels on this chart right now, and if I could just clean a few up. So I've done quite a bit of analysis on USD CAD along with GBP AUD and gold later on in the course, on some of the later videos. But for now, if we take a look at some of the psychological levels, we've got 300 right here. All right, look at all of these wicks. If we take a look at 1, 2, 3, 4, 5, 6, 7, 8. The medium term price range is 300. 300 being said, the orders are flowing quite nicely through that region. We could maybe even stretch it to 3250 and then 3350. That entire region, a lot is going on. Now, most recently, price was straggling, side to side, consolidation, not really doing too much until we had lift off over here. Number one, we closed back above the moving average, the 80 MA, and then we continue to sustain above that when it comes down to the price. Price most recently, not last week, the week prior, came back into it, tapped the moving average, and then what we can also see here is boom, tail coming into 300, but look at the weekly closure. Week closed high and heavy. The week closed high and heavy. We also have a bullish engulfing formation, engulfing the previous week, and now this week, what's significant here is that the market has pulled back above the MA. So the weekly is pretty important to gain perspective, and it can also assist us in a bull market and bear market. Over here, as you can see, price pulled back above the moving average, and this MA is more or less, think of it as a trend line. It hugs the price. The trend line is broken. Price sustains above, spike through, spike to, spike through. But look at how the market will always come. I'll say 80 to 85% of the time, it will always come to retest that zone. So if we have clarity in our analysis and clarity from our top-down perspective, always starting on the weekly, doing fresh weekly analysis to see how the market will react from the 8 moving average on the weekly. 8 moving average on the weekly can assist us greatly. Now, obviously, I'm expecting USD CAD to come into the higher regions of 3650. If I look at another weekly example, start with a GBP AUD. Whoops, wrong button. Start with the GA. Okay, for some reason, it's not allowing me to, 1 second. Now, there we go. It wasn't allowing me to expand that chart. Okay, so chart expansion. Let's have a look at GBP AUD on the weekly. Right, GA on the weekly, looking at the moving average and moving average alone, what we can now see, if we zoom right in there, we can see the market, boom, came back up. After the wick, 2 wicks into more or less this price region right there, we have 7,700, 7,800. Weekly orders have been picked up. Price sustains above to the highs, taps out at 8.4, pulls back. Look where it pulls back into. It pulls back into the moving average. Here again, open, spike through, body closes below or just on. Next candle, boom, price comes back into the MA, finds support. It's a dynamic area of support. It's a dynamic area of resistance. I'll get into other examples in a moment where we can see maybe the flip side of this in a bearish market. But as you can see there, again, bullish engulfing straight off the MA. So your bias after this week potentially should be potential upside after a pullback. So this can give you a lot of power into the coming week. Over here, boom, retest back above. We broke 8400, sideways, 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 pinned the moving average last week, came right into it, spiked through 8400, closed back above, also spiked through the moving average. Look what we've done already this week. Price comes down into the MA. We have another spike there. What are we expecting now? We are expecting price rally to the upside. Maybe, due to last 3 weeks in a row being trapped in between 8.4 and the highs at 8.862. So you have a 462 pip range from top to bottom. But what's significant here is that 1, 2, 3, all tapping the MA as a dynamic area of weekly support. Can we now expect a price, rally straight through this region and then beyond? If we look at previous price action, when the price more or less gets a little bit too far away from the moving average, expect it to be magnetized back towards it. That's weekly there. Let me go into the weekly on gold, then we can go deeper into the daily. Cool. All right, so if you look at gold, gold's quite a good example. Over here on the left-hand side, we had a price build-up for quite some time, week upon week upon week upon week. Boom, boom, boom. Spikes thrown to the high, spikes thrown to the high, to the high, to the high, to the high. Breaks back below the MA, gives us a quick warning, but then boom, look what happens here. We take out the box, but we also take out the previous candles. The wicks. 1 wick, 2 wick, and then momentum comes through, closes below both of those wicks. Market retests the back end of the box, 1, 2, 3. But also, what's important here, the significance is spike back into the box, price momentum comes back through. Price momentum takes out all of the bodies of this miniature range here, which would be a daily range, cleans out all of the wicks, body closes below, okay, right across there. And then now what we can actually see is price remains below the MA. The moving average can also be used for trade management. How? Simply because price can remain below sometimes, so it gives us confidence to actually remain in a trade. It gives us the confidence to hold our winners longer. Then the market, as you can see, we came a little bit too far away from the MA there. Price came back to it, magnetized towards it, messed around for a while, spike into the high, spike into the highs, broke out of the box, retested, but then what happened? Market pushed back up. Body closure above the MA is a good buy signal. I'll get into that into the next video. MA is part 2. But we're back above. Look at these 2 doji candles. There's indecisive action here. Market's waiting for orders to be picked up picked up so it can fly into the next destination. Also retest this box across here perfectly. Market pulls back up. What is this? That's more or less 1210. You've got a nice psychological level there as well, in which the price was forced into. Bang, we're back above. Price now starts to rally, but also it stays above the moving average. Recently on gold, we came in, we made a higher low in this price structure. We closed back above, and now gold, for me, we're looking, if we can now close back below that moving average, it can signify a potential structural reversal is now in. But we have to see how that weekly candle closes. That's not to say we can't take a trade south. We can't go in on the bear move on a lower time frame. So let's just go into the daily now. So with the daily, just excuse some of my drawings, I'm just active on this at the moment. With the day, we push back above the MAs, okay, flailing around. But again, this is just a general guideline. The weekly is important because what we can do with that weekly is we can write it down, we can journal it. It can give us a heads up as to which direction we more or less want to be trading in. If we're above the moving average, we kind of want to go long. It's very, very simple, but again, you don't have to use this if you don't want to, if you're comfortable without it. I'm just showing you guys how with this and with many tools, you need clarity and organization. Clarity and organization is key here because you need space in between your thoughts. You need the space to organize, okay, confluences. That's why journaling is important. Always have a notepad handy. What we're looking for now on gold, as you can see, we were above, but we're spiking back through it multiple times, sometimes to the T, sometimes, but what's important, the bodies of the candles are above. The body of the candle, let's say this day right here, if the market pulls down south and closes below the 8 moving average, guess what? That's a signal to sell. Then what we could maybe expect, maybe on the 4 hour, maybe on the hourly, a little pullback, and then we can look for the short position. Something like this. So we get the break below, spike back through. But as you can see, this is what's more or less shifted the direction here. We had this false break there as well, but then this is where, guys, we need to mix up the tools, the lower end structure. So use it just as a guideline. Use it as a guideline. The break below, I'm going to do that on video part 2. I'm focused on just when the price is moving above the MA or below. I'm just showing you guys, okay, how market can always pull back, pin it, and then maybe jump off. So what we can see here is market boom, back above, and then we remain above the day for some time. If you look at the weekly as well, the weekly is up over here, okay? Weekly is rallying. The daily is also up. So again, it can assist you in your bias. You can write this down weekly, or you can even do screenshots. You can do annotations and come from that end. If you look at the 4 hourly as well, 4 hourly is a really good time frame to execute from. The hourly can be a little bit messy, to be honest. So it's more of a 4 hour sketch. More of a 4 hour sketch. So at the moment, gold, we made the highs. We broke out of an hourly region over here from 1310 up to 1315. Once we broke out of the hourly region, and there's the breakout right there, what gave us the insight beforehand was the break above the moving average, break above 1310, how we consolidated. But look at the wicks, wicking, and then boom, breakout, retest, continuation, high. And what we can see now is same scenario. We're back below, as this candle breaks back below the moving average, the black line, spike back to over here. And then what we can also see is 1314 is being broken. The market is throwing wicks to the upside, can't sustain that momentum. And then now we're getting a breakout of not only the box, but we're breaking below 1310. Breaking below 1310 in 45 minutes, that is your short opportunity right there. But you can see how the MA has guided it, and it's a rough estimate as to the average of the price. That now we've gone from a nice bull mode into bear mode. Signal 1, consolidation. Signal 2, short, target 1305. Longer term target all the way back down here on the day. So with that being said, what we can also do is we can, let me just show you one or two examples on the day now. So looking at the day on the USD CAD, so the weekly is up and we're expecting further upside. The importance here on USD CAD is to see and merge in with most recent area of support, which is actually a 4 hour zone. So the market consolidated for quite some time. We spiked into 1.3300. As you can see, huge orders have been picked up here due to the velocity of the candle body only really closing 20 to 30% of the move. Same thing again. Then we start to make headway. Market corrects itself, and now boom, we're going back to the upside and hopefully coming into the most recent regions on the day where the highs are at 3665 to 3650. Back in time here on CAD, you can see that the market pushed up above the MA, spike through, rounded bottom, and then the market continues to fly. Over here, bang, break back below, and so on and so forth. So now we're above on the daily. You can see how we've tested that MA, the moving average, as support. But you can also see over here, you know, this isn't going to be the perfect scenario each time, guys. It depends on the market. It depends on how fluid the price is moving and the volume. Coming through here, boom, 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 break back above. That's our first signal. Signal long after picking up the orders down here, leaving the wicks behind. Now I'm simply looking for USD CAD to continue to the upside. And if we look into the 4 hourly on USD CAD right now, we can clearly see market comes down, corrects, okay. We have the break back above the moving average there, and you can see we've just tested the back end of that. But point being is that over here, above price and below price, retested the upside, upside down, and then over here, boom, as you can see, came back in. Sometimes when the market gets too far away from the moving average, it will take time to correct itself, may consolidate, hit the moving average, show us signs of potential, maybe even a higher low, or maybe even picking up orders where the wicks are 1, 2, 3, and 4. Market continues to the upside, breaks back below, starts to swing, corrects itself, and now we're back above. So it's just a general guidance tool and something we can use to solidify entries and also get the bias. The GA, coming into the GBP AUD, looking at the daily chart now, we consolidated for some time through that from high down to low, and what we can also see is that we pushed higher. Okay, we've broken 8600, we're breaking the moving average, and now we're looking to go into a higher realm, the higher levels. Over here on the 4 hourly, we made the rounded bottom at 8500. We broke back above the moving average right there. That there, good, bounced into the MAs again, and then now we're rebounding from that. Retesting the zone of zone support from the previous wick off the back end of the shooting star candle, and now we're looking to actually go a lot higher. So that's just an introduction into the MAs. You know, you don't have to use them if you don't want to. What I will suggest is just keep this chart clean over here if you are going to use the Astro flip chart. And what we're focused on over here is obviously bringing the two hemispheres together, which I've already mentioned, and just focus solely more or less on the wicks, and just to give you an opportunity to see the market in a different light. So that's that. Let's see how all of this plays out. Looking good so far. And yeah, thank you very much for your time. On to the next video.
I just want to